Hello everyone, this is Akal from Key Academy, and today I just want to discuss the weekend roundup for our Indian stock market. So this is a chart, monthly chart of Sensex, and in 1980 we see that it was at a level of around 100, 110, 115, 112, and today it's at a level of 54,000. So on, I've drawn this line between points 1, 2, 3, 4, and 5. This is a ceiling line or a resistance line which was formed after points 1 and 2. Point number 1 was the December high in 2007 or January 2008, and point number 2 was January 2015. So this line got established here, and then it has shown resistance at points 3, 4, and 5 recently in 2019. At 5, it fell from the COVID fall of March 2020, and then we had QE at this in April or March again 2020, and ever since the market went up. And now this line is around the so the market has been going sideways to slightly downwards for about 9 months now, and looks like the market is going to headed towards 50,000 level. That's about 7.5% down from the current levels. So this is what this monthly chart of the Sensex tells us. This market is going to test this resistance line, and now we are expecting the resistance line to act as support because the prices are coming from above resistance line, so it should act as a support. Let's see the weekly chart of Nifty. This is a Nifty weekly chart. So it made a high in October, in the week of 20th October 2002, and actually the date is 19th October, and ever since it's been drifting downwards, and now I feel that it's going to come and test this line at around 15,670, and then it will take a turn for the worse if it goes down. One should not think of buying into this market unless this level of 17,000 is broken. It's slightly far from current levels of 16,200. 17,000 minus 16,200 is 800 points divided by 16,200. This is equal to about 4.93% or about 5%. So unless the market gains 5%, you should not think of putting fresh money into the market. And let's see how it looks on the daily chart of Nifty. This is the Nifty daily chart. This is the COVID fall which we had discussed and which I just mentioned right now. And after that, this is the market's gain or because of uh, liquidity and money which came into the which were released by the governments all over the world, and they found their way into the stock market. So after that, this market has basically formed a distribution pattern correcting the up move. And this fall started on 19th of October 2021. So this is I am calling it a weak megaphone pattern. A megaphone pattern is a pattern like this one, like this. So it's like in the shape of a megaphone, the bugle which policemen and all they use to amplify their voice. So this pattern, you need a breakout in one direction, either in the upwards direction or in the downwards direction, before it can be traded. And it's a weak pattern because it's not even going to the prices are not rising to hit the above red upsloping line. They are actually, the upsloping line is a downsloping this blue line. So that's why I'm calling it a weak cut. Also, something to be noted is that this uh, black curve, which is the 200-day moving average, which is uprising, which is rising upwards in the entire 2021, has now become in 2022. It has, since February, it has become horizontal and is now turning downwards. Here it has even turned downwards. And basically, what it means is that prices are going to get resistance if they try to move up towards the 200-day moving average. One instance of this has already happened on 3rd of June when market did go up, but it was it is formed a dark cloud cover on 3rd of June. This candle, black candle, and also we know that there is a sort of a trend line which has formed from 4th of April and then from 29th April. Between these two lines is formed a trend line on which the market is sliding downwards. Is unable to go up. On Thursday market did show a white candle, so we were thinking that maybe the market will show another white candle on Friday. But basically, US fell a lot on, this is the US daily chart. US showed this candle on Thursday night, and because of that, we fell on Friday, like this black candle on Friday, and then on Friday night, US further broke down 2.91% because they got very bad inflation data. So we are expecting a down move in the markets on Monday also. And why only Monday? I'm expecting the down move to I'm expecting this line to get tested now. And these red moving averages are, they are showing that the trend has become horizontal now, and the blues have already gone through the reds, and this is a negative. This blue is going through the reds, and the reds are turning downwards. So basically, the market has changed its character from bullish till October, till mid October. Till here, the market was bullish, and now it has taken its time to go sideways, and now it's curling over and it is trying to go bearish. So this is what the chart is telling us. Also, there are many voices being voiced in USA that US is headed for a recession. So, and these are good people who are talking like that. So there are many things which are saying that the charts are going to go down. If US heads into recession, its market is already, like I just showed you in this chart. This is the daily chart. Let's look at the US weekly chart. This is they have already this chart looks worse than ours. It's this one is this candle is slightly above. It's at 3900.85. This candle is 3901.35. But there could be a little bit of divergence here on the weekly. So maybe next week could be slightly positive on the US, slightly, may and also maybe. But sometimes the negativity overrides, so I won't count much on that. So my prognosis or something is that this 15670 is going to get broken in the near future, and the market is negative. Anyway, even if the market was not negative, or you think that the market is positive, the buying is not warranted unless it crosses 16750. This is above the 200-day moving average, and even then the buying is not warranted unless this is a very strong resistance line. If you're trading for the very short term, then you can trade, then you can do whatever you feel like, but I don't typically recommend. So the safe entry for a buying would be only above when this 18,000 level is broken, and then your target would be somewhere around 20,000 minimum, 20,000, 20,500, and that's a good 10 to 10 15%, 10 12% move on the Nifty. But you have to wait for that to happen, and at the moment doesn't look like Nifty wants to go in that direction. So that's all as far as the market index is concerned. And I want to leave you with a stock which I want you to look at. Market is falling, but this stock is monthly. Uh, See, market has been monthly Sensex or Nifty is the same chart. Market has been going sideways, and now it is falling in these months. Whereas this chart has been going up. So this is showing strength against the market. So there is something good happening in TVS, and TVS looks like to me it looks like stock to be bought or accumulated when if the market falls a lot. So do your research on this stock, and I'm just highlighting this stock that I like it, and I'm not saying go out there and buy. This is not a buy call by any means. Do your research on this is all I'm saying. So that's all for today, and I'll probably put out a video again in the middle of the week to see how things are panning out, and then again next weekend. And by the way, also I hold a class on Google Meet, which I'll try and put a link on the description. So thank you for listening to me.